Good morning, everyone. Welcome to the Daily Commodities and Currencies podcast. This is Manish Sharma, working as AVP Fundamental Research in Anand Rathi Investment Services and taking ahead for the daily triggers as well as the outlook for the day. So let's start. Gold and prices remained volatile yesterday. We saw another fresh all-time highs around 3871 levels in the spot markets, but again it went down to almost 3800 levels yesterday. But recovering the part of the losses, where we have seen remarkable resilience again from the yellow metal. It has effortlessly clawed back early losses because the US job openings data was very uninspiring, and labor turnover survey showed that the hiring rate was slowing down while the layoffs remained low, and it continued to augment bets that there will be another rate cut in the October month. Now again, what we can see is the gold prices, which is currently trading at around 1,17,650 per 10 gram levels on the MCX futures contract, is expected to witness supports at around 1,15,950 levels. And on the higher side, it can still test 1,18,280 levels to 1,19,100 levels in 1 to 2 days perspective. Overall, the risk of US government shutdown is also persisting because recently the US government has announced that it will be going ahead with a shutdown process, where there will be blockage in the funding, and the US federal agencies and other agencies will be short of the funding, and that will lead to again the delay in the macroeconomic data to be released in the coming days. So overall, gold is expected to remain volatile to positively biased for the medium term, while there will be a risk of shutdown creating volatility in the prices. Silver is expected to trade with supports at around 1,40,540 levels. Only a breach of this support could lead to further losses, while on the higher side, the resistance persists at 1,43,800 and 1,44,900 levels. Talking about base metals, what we saw, copper briefly tested 10,400 to $10,500 per ton levels after on the higher side before reversing over 1% yesterday, while aluminium and zinc prices witnessed recovery on the short covering moves. Other metals remained steady, while China's September PMI have showed slight improvement but remained in a contraction for a sixth straight month. Beijing had cut its 2025-26 non-ferrous output growth target to 1.5% from 5%, signaling slower refined copper expansion. Overall, markets with holiday mode today. China on the holiday mode the trading is set to remain subdued, where metals could remain in very tight ranges on a day trade. Overall, the fundamentals is not driving the market mood, but the fundamentals are more or less boosted by a weaker dollar and also by asset price momentum and concentrated LME stocks. However, because of the disruptions in the Grasberg Indonesian mine, this is supporting the copper's push towards $11,000 levels on a medium to long-term perspective, while physical market discounts and weak PMIs as well as the muted Chinese restocking point to very fragile demand outlook. Key resistance for the copper on the LME will remain at around 10,500 levels on the higher side, while on the MCX we can expect resistance at around 954 to 960 levels in the day trade perspective. Talking about the energy complex, oil prices have extended losses yesterday as supply concerns have outweighed geopolitical risk. But WTI on the international front have fallen at around 1.7% to $62.37 per barrel levels, marking a second straight day of declines after Monday's sharp 3% drop. Pressures have mounted on expectations that OPEC Plus may accelerate production hikes in November, with discussions discussions ranging from 274,000 barrels per day up to 5 lakh barrels per day. While Iraq's oil exports have resumed after a 2.5-year halt, which have added fresh barrels to the market and augmented the supplies. Oil is likely to trade range-bound today as a third straight US crude draw from the API data have shown that this is providing a very near-term support to the prices. However, the concerns over the potential OPEC Plus output hike continue to cap upside, and focus to remain on EIA report due later today, which will set a near-term direction, as well as the OPEC EIA report, monthly report, which is due later today. WTI supports for the day could come at around $62 and $61.20, while the resistance on the higher side would remain at $63.50 and $64.80. Short-term outlook for crude is neutral to bearish, and the downside risk persists only if the OPEC Plus signals stronger hikes in the coming quarters. Now, coming to the currency outlook also, we have all important RBI meeting due today in the morning, where markets are awaiting the Reserve Bank's monetary policy decision on the interest rate, which will be announced at around 10 a.m. And rupee could remain volatile in day trade if there are indications of rate cuts today, and also the RBI expected to cut rates in the coming meetings. However, there will be constant pressure from the FPIs also buying dollars, which have brought down the rupee recently to all-time lows, while the RBI is also expected to intervene at around about 89 levels, supplying dollars to the market. While today's move about 89 could also be witnessed in case the RBI goes ahead with a rate cut decision. The macro data as expected today would be the RBI rate cut decision in the morning, followed by the OPEC meeting and in the afternoon, and followed by the US ADP non-farm payrolls data, which is scheduled at around 5:45 p.m. in the evening. ISM manufacturing PMI is also due at around 7:30 p.m. in the later in the evening session. So this is all about the daily updates. I hope you have gone through these updates, and we wish you a very successful trading day ahead. So thank you very much.